Good afternoon. This is Sean Golding from Golding and Golding, here to discuss what is a long-term resident. So, common situation we come across as an individual is they're not just a visa holder and they're not a citizen. They're a green card holder. They have legal permanent resident status and they want to give up that status. It's been maybe 10, 15, 20 years. They're going back to the country they're originally from, getting ready to retire. Maybe they have grandchildren back there, and they decide they want to give up the green card, and they realize that there's a lot more to it. Uh, One of the biggest problems with becoming a long-term resident for tax purposes is that now they may be subject to an exit tax. The material gets pretty complicated, so why don't we just focus on the basics, give you an idea of what this is all about. So when it comes to expatriation, giving up your U.S. status, there's two main categories of filers. There are citizens, either naturalized or at birth, or long-term residents. A long-term resident is a category of legal permanent resident who has been a green card holder or legal permanent resident for 8 of the last 15 years. Once someone has been a legal permanent resident for 8 of the last 15 years, they now may become subject to exit tax. They're called a long-term resident. Whether or not they reside in the U.S. or not, it doesn't matter. So, in order to be a long-term resident, you have to have legal permanent resident status. In other words, if you're here on an L1, H1B, E2, E3, O1, even if you've been here for 30 years, you wouldn't qualify as one of the potential categories of filers who would be a covered expatriate because you're not a U.S. citizen, you're not a legal permanent resident. So essentially, the tax treatment for long-term residents will depend on whether or not they qualify as a covered expatriate. So basically what happens is this. When a green card holder is getting ready to expatriate, they have to take a look and see how long they've had their legal permanent resident status for. If they've been a legal permanent resident for at least 8 of the last 15 years, they are considered a long-term resident. If they're a long-term resident, when completing Form 8854, which is the initial and annual expatriation statement, they must go through the 3 different tests to determine whether or not they are a covered expatriate. Um, the 3 tests are the net worth test, the net income tax liability test, and the 5-year tax compliance certification test. If so, then they have to get into mark-to-market analysis and computation. They have to look at exclusions. They have to look at deemed distributions and all that fun stuff. My name is Sean Golding. This was our presentation on long-term residents. If you want some more information, feel free to visit our website at goldinglawyers.com. We also have a sister site devoted exclusively to expatriation type issues called expatriationattorneys.com. Thank you for your time.